Using a Roth IRA is a great way to save on taxes, and if you're like most people, you should certainly be using one if you're not already. But if you plan to retire before the age of 60, it may not actually be worthwhile to prioritize your Roth IRA. So in this video, we're going to talk about who should be using a Roth IRA and who probably shouldn't, and we'll discuss all of the advantages and disadvantages when it comes to trading stocks in a Roth IRA. So let's get into it. My name is Charlie, and on this channel I make videos about building wealth and achieving financial freedom so that you can free up your time to focus on the things that you truly care about. Now before we get to the video, just a quick reminder that I recently introduced a new Patreon tier, which allows you to get notifications whenever I make a trade. So by joining at that highest tier, you'll be able to follow me on the IRAs app, which allows you to receive instant trading notifications for both my Road to Financial Freedom portfolio and my main portfolio that I use for income. And for each trade, I add a short description so you know exactly which strategies I'm using. So be sure to check that out if you're interested, and now let's get to the video. So in case you're not familiar, a Roth IRA is a type of post-tax retirement account. And within the account, you can buy stocks or any other investments, just like you would in your traditional brokerage account. But the rules within a Roth IRA are a bit different, and it provides you with some tax advantages over a traditional brokerage account. So most brokerages these days do offer the option for a Roth IRA, and they're all exactly the same and of course completely free. So if you're looking to open one up, you should just open it with whichever brokerage you're already comfortable with. Then once you do open your Roth IRA, you'll fund it with after-tax dollars, and once that money is in the account, it can grow completely tax-free. But of course, since it is a retirement account, you can't withdraw your earnings until you turn 59 and a half, and you can also only deposit a set amount of money each year. So for most people, the deposit limit is $6,000, but that can vary slightly depending on your income level, your age, and your marital status. And if you make above a certain amount, you actually can't contribute to a Roth IRA at all. So you'll definitely want to take a look at the requirements before you open one up. And I'll link a resource in the description below where you can check those out. Now to be clear, you can withdraw your initial principal from your Roth IRA at any time, tax and penalty free, but just not the earnings on that principal. So for example, let's say you deposited $60,000 into your Roth IRA over the course of 10 years, and that money grew to be worth $200,000. Which by the way is about a 1.6% monthly return or a 21% annual return. In that case, you can withdraw your $60,000 at any time because that's the initial principal that you've deposited. But you have to wait until you turn 59 and a half to withdraw the remaining $140,000. Otherwise, you'd be required to pay taxes on it along with a 10% penalty. So that's the gist of how the Roth IRA works, and if you're wondering how it compares to other retirement accounts like a traditional IRA or a 401k, the main difference is that those accounts are funded with pre-tax dollars rather than post-tax dollars. So with a traditional IRA or 401k, that money comes straight out of your paycheck before any taxes are paid, and then you pay the taxes on the back end when you withdraw your money, which is again after you turn 59 and a half. So the question a lot of you are probably wondering is, can you trade stocks and options in a Roth IRA? And the short answer is that yes, you can perform most of the trades in a Roth IRA that you could in any other account. Basically, as long as the trade has limited risk potential, you can use it. So that means that you can sell covered calls, you can buy leaps options, and you can set up poor man's covered calls. But the main limitation of a Roth IRA is that you can't take on naked short positions. So the only trade that I normally use that I couldn't use in a Roth IRA is selling naked calls. But you could set it up as a bear call spread instead, as I've talked about in other videos. Now you also can't use margin in a Roth IRA, but that's really no big deal because the tax benefits of the Roth IRA will outweigh the benefits of using margin anyway. Plus, you won't have to deal with the increased risk level that comes with using margin. So overall, I treat my Roth IRA in the same way as my traditional brokerage account. The only difference is that I only keep about 5% or less of my Roth IRA in long-term holds, as opposed to the 10 to 20% that I keep in my traditional brokerage account. So I use the large majority of my capital for covered calls and poor man's covered calls because those strategies are less tax efficient, so they benefit more from being used in a Roth IRA. So again, Roth IRAs are a great tool for the vast majority of people, and as a covered call writer, it's a huge benefit to not have to pay any taxes on any of your trades. But if you're planning to retire before you turn 60 and you're planning to use your stock portfolio for income during that time, you probably shouldn't actually use a Roth IRA, or at least you shouldn't prioritize it over your traditional brokerage account. Because again, with a Roth IRA, you can only withdraw your initial principal without penalty, so if you need to withdraw money regularly to pay for your expenses, you'll be out of luck. Instead, you'll need to use a traditional brokerage account and just accept the fact that you're going to have to pay taxes on it. Which really isn't too bad when you think about it, because it's just like any job at that point. There's no job that provides you with a living income that doesn't require you to pay taxes. Now, if you're planning to retire early and your savings rate is high enough that you can actually contribute significantly to both your traditional brokerage account and your Roth IRA, by all means, it's a good idea to do that. Because if you build up both of those accounts, let's say you then end up retiring at 40, you can live off of your main brokerage account until you turn 60, and then start tapping into your Roth IRA as a tax-free source of income from then on. But again, if you've built up your traditional brokerage account to the point that you can comfortably live off of it, the Roth IRA isn't 100% necessary to have. It's basically just an extra safety net at that point that you can use once you get older so you don't have to worry about taxes eating into your gains. Now, it's also important to note that you can only contribute to your Roth IRA using your working income, meaning that once you retire, you can no longer contribute to it. So if you do plan to build up a Roth IRA, you'll need to do it while you're still working. Or alternatively, you could get a part-time job in retirement and contribute to your account using that income. That would work too, as long as you're not contributing more money than you're actually making. So hopefully this helped you to see whether or not a Roth IRA is right for you. And now, if you missed my last Road to Financial Freedom video and you want to catch up on that series, be sure to click that video in the bottom right corner of the screen. Otherwise, thanks a lot for watching, and I'll talk to you all in the next one.